All right, good evening, traders. Today is December 8th, 2025. My name is John Carignan. I'm the lead instructor here at the BYOB Trading Room. That is the day trading service for the hit and run candlesticks family. So, today's topic right now, it's going to be the VWAP moving average. I never trade without it. So, let me dig in. Let's find out what VWAP is first. Let's start out with it's an acronym. So you can see right here it is the volume weighted average price. So it's supposed to be close to taking the average price that every share sold from the beginning of the day and then dividing it by the total number of shares that sold. That's what it's supposed to be, but it's not quite that. There's they seem to take the average of the last minute sometimes, or whatever the last minute of the closing candle, whatever the price is at the end of the closing candle is sometimes used as the price for that whole candle. So you could wind up with different numbers on different time frames, okay? But for me, I like to use it because it's not exact, but it gives you a ballpark of what shares are selling for of a certain security. So for me, it's essential to know whether the security is in demand, because if it's in demand, you will typically see price rise. And when price rises and the shares sell for higher and higher, the VWAP moving average will also rise along with the shares that is sold at higher prices. And the reverse also stands true when price decreases, okay, when it's not in demand. In other words, people want to shed it from their portfolio or from their position, you will see the VWAP moving average pointed down, in which case what you'll see is the price is now decreasing, the average price is decreasing, and therefore the VWAP average is pointed down. Now, you want to look at it. I like to look at it in the morning. I look at it with the pre-market on. All right. First, let's talk about how to set this up. Okay. Now I look at it in the morning. All right, right here with the pre-market on, so I can see the VWAP. Now, volume weighted average price starts out new every single day. Okay, so if I move to a daily chart, you're going to find that this brown line, this is my VWAP line, the brown one right there. Okay, you're going to see that my brown line will disappear. Watch what happens when I move. I'm going to spread this out to a daily chart. Okay, you can see that everything disappears right there. Okay, so I let me just take those off. No, I don't want to take all those off, but let's pick up a different one right here. Okay, so you can see my VWAP disappears now. Okay, there's no VWAP on there because it's an intraday moving average. Now, if you wanted a moving average that spanned over multiple days, you would use the anchored VWAP. Okay, so I use this one as well. You simply take the anchored VWAP, it's the anchor right over here, and you plant it on wherever you want price to start calculating the average. Okay, so I like to put it on the all-time highs, the all-time lows, the yearly lows. I like to put it on breakouts, like let's say FOMC did a rate cut. Okay, just before the rate cut, price was down here at 650, and then after the rate cut, it shot up to 662. Okay, so I like to put it down there just before an event. All right, that takes place. That's how I use the anchored VWAP. But you can see regular VWAP that's used within. It's an intraday moving average that you can't get on the daily time frame, the weekly, the monthly. So anything bigger than a daily time frame, you're not going to see VWAP show up. Now, if I wanted to add VWAP to my chart, this is TC2000, and you may have a different platform, but for those of you on TC2000, I'll simply show you how to add it to it. It's really pretty simple. You right click, you hit add to chart. Up here you see indicator, all right, and you just simply type in VWAP, V like that, and you see moving VWAP right there, all right, and then you can color it and thicken it up to whatever you want. So that's moving. I think I wanted something different. Add to chart. Let's try it again. VWAP. There it is. That's the one I wanted. Okay, so you can see here's VWAP right there. All right, so you can see that's right there. That's the brown line. Okay, so I'm going to take this off because that's not the one I wanted. Okay, I wanted this one right here. So this is VWAP, and you can thicken it up by you want to edit it and you want the line to be a little bit thicker. You could go like that. That makes it a little bit thicker. And if you want to change the color, you could just pick whatever color. If you want it to be, you know, fuchsia right there, or if you want to go back to brown or gold, the one I had right there, that's the one I like for, because I have other colors on here at the same time. All right, so the big thing is I don't trade without it. So for me, I first have to define my trade. Most all of my trades revolve around the 10-minute time frame. All right, and I'm a trend trader, so I need to have a trend. So what is my 10-minute trend? All right, so I'm going to look at what I call my 10-minute trend. For me, it's the 3 EMA, all right, and the 8 EMA right here, the 8 EMA. Now I color my 3 EMA with a yellow line. I color my 8 EMA with a white line. All right, so I like to see a trend. All right, so here I've got a 10-minute, because I'm on the 10-minute time frame, 10-minute downtrend. How can I tell it's a downtrend? See the 3 and the 8, those two moving averages, they're exponential moving averages. They're both pointed down, along with VWAP, all right, which is the brown line, and it's also pointed down, okay? So I like a trend that when I trade my trend, I like it to be under VWAP. That gives me more confidence to take my downtrend when I see that VWAP is moving in a downward direction. When I see the average price continues to decrease. All right, so I'm looking for a downtrend with a VWAP that's moving down as well. All right, so I like a 10-minute trend, and this is my trend. I like the candlesticks to be riding. My downtrend, I like them to be riding underneath my 3 EMA. Okay, that's that thin yellow line. And I like my candlesticks and my 3 EMA to be riding underneath my white line, which is my 8 EMA. Okay, and then I like all 3 of those candlesticks, the 3 EMA, the white line, the 8 EMA, all to be pointed down and moving. All right, this is the important part, moving away from VWAP, which is this brown line right here. So for me, VWAP represents the price that shares should be selling for. Okay, if you were to go down to your go down to Main Street and you wanted a share of something, let's call it S&P 500. This is what this is the average price. This is what the shares should be selling for, but they're not. Instead, you can see that the shares of S&P 500 are selling for much less, meaning people or investors are removing them. Okay, there's money coming out of the SPY. Money is leaving the SPY. They no longer want these shares. Okay, so and what happens when that happens is you get price candles underneath the average price, because people don't even want to hold it for this much. They're willing to take a loss and sell it for much less than what they should be getting for it. Okay, it speaks volumes like that. When you see they don't want it, they don't want it in their portfolio, or they're ready to take profit on it because it moved up from down here, and they're afraid they're going to lose their profits, so they tend to want to take their profits here. They see themselves at a prior high. You can see a prior high up here. All right, and they don't want to be the last one holding the shares when the music stops. So what this is the price that shares should be selling for. But what you see is there's a trend of sellers that really don't want to sell it for that price. They'd rather get rid of it for even less. So they're just flooding the market with shares, just trying to dump them from their position, or dump them from their portfolio. So they don't want them. So what this makes up is a downtrend. And for me, that's what I like to find is the trend, because I'm not very good at picking tops and bottoms. Okay, I'm really not that good at all picking tops and bottoms. I can show you where support and resistance are, but I'm not very good at picking tops and bottoms. Price seems to go much further, all right, when I pick a top, and price seems to go much further when I pick a bottom. So I'm not very good, but what I am good at is I can find this trend, which is very easy to find, and I can fall in when I see that it's moving down and away from VWAP here. You see how the 8 EMA and the VWAP, see the mouth of that opening keeps getting wider and wider and wider, meaning price is falling faster than VWAP is falling. You see that? Price is falling faster than VWAP because the 8 right here is moving away from the VWAP, the moving average line, the price that shares should be selling for, and it's moving quickly away from there. Now that's how I make my money right there, is by falling into this trend right here. So I see it's short, I see it's falling or it's decreasing, price is decreasing, all right, money's coming out of the SPY. So what I like to do is I'll either sell shares short or I'll buy a put, okay, and I trade my puts, all the way down to the bottom. Now as price decreases, all right, most of the time my put will increase in value as price decreases, okay? Okay, so if I trade out of the money options like a put, let's say I traded the 682 put when we first started this morning, we were at 686, okay? But I had the 682 strike, and what happens is you see price as it gets closer and closer to the strike price, the value of the put rises right along with it. Okay, so When price decreases, the put value increases. Now, when they increase, I like to take profit. I call it into strength. Now, it's not the strength of the SPY, it's the strength of the option candle, because the option candle will rise. All right, so here's VWAP. There's my trend. Remember, that's the candlesticks and the 3. Okay, riding. I like my candlesticks to be riding underneath my 3 on my downtrends. All right, and you got my candlesticks and 3 riding underneath my 8. All right, and I got all 3 of them are riding together. And you see this space in between the 3 and the 8? Okay, that's what I call the daylight. When I see lots of daylight there, I know I can make money because price is dropping fast enough that I can buy puts or sell calls and benefit from this price drop. Now, if the candles happen to get snugged up next to the 8 and they eclipse this daylight that you can see between the 3 EMA and the 8 EMA, that shows me that there's bullish pressure. See over here? We got bullish pressure. See, there's no daylight between the 3 and the 8. It actually starts to diminish. The 3 now begins to cross over the 8 and head back up to VWAP. Okay, so you see that would be bullish pressure. This is beautiful with the daylight between the 3 and the 8. When you get it and it's eclipsed, you see a lot of wicks or tails or bodies that eclipse this daylight that should be between the 3 and the 8. That means there's pressure from the other side to go in the opposite direction. So be careful with your stops and keep an eye on your price action, because there's a possibility, all right, when you see that price may reverse. As you can see right here, price reverses and starts going all the way back up. And you can see now we're over VWAP. So my favorite trade is the 10-minute uptrend. It's the 10-minute uptrend over VWAP. All right. Now, I like it because it's moving up and away from VWAP. All right. And at this time, the market's making new all-time highs. So I like a 10-minute uptrend over VWAP. So I would want my candlesticks to be riding above the 3 EMA as opposed to below. I would like my candlesticks and my 3 EMA to be riding above the white line, the 8 EMA. I'd like both of those, actually all 3 of them, the candlesticks to be moving up. The 3 EMA, which is the yellow line, I want that to be moving up. I want the 8 EMA, which is the white line, I want that to be moving up. And I want them to be moving up over VWAP, all right, and away, all right. I want to see VWAP rise, and I want to see my trend put some distance in between the uptrend, all right, and the VWAP line. So I want to see the VWAP line moving up. I want to see the trend also moving up, but faster. I want to see the momentum moving price higher and higher and higher. And that's what gives me the courage to jump in to these trends, okay? Because if I don't see that, it's not in my best interest to trade that. It's just I'm looking to make money, all right? And for me to make money on an option that has a lot of decay, I'm going to need some price movement. And without the price movement, my option will tend to just decay faster than the price movement, in which case I wind up eating the cost of the option. Now I don't want to eat the cost of the option, so I'm looking for a distance to be put in between the uptrend on the 10-minute time frame and the VWAP line. again, my favorite trade is the 10-minute uptrend over VWAP that resides inside of a 2-hour uptrend. Okay, so on a 2-hour uptrend, I would have my candlesticks riding on top of my 3. And then I would have my 3 and my candlesticks riding on top of my 8 EMA. That's the white line. And I like to see all 3 of those, the candlesticks moving up. I'd like to see the 3 EMA either pointed up or slightly up. Same thing with the 8 EMA. I want to see it pointed up or slightly up. All right, and that would be my 2-hour uptrend. So I want a 10-minute uptrend inside of a 2-hour uptrend that resides inside of a daily uptrend. All right, that resides inside of a weekly uptrend, inside of a monthly uptrend. Okay, now I'll put all that together. Why do I want all of that to be working together? See, I like to see all of the bigger time frames supporting my little 10-minute uptrend. All right, I want them pushing my 10-minute uptrend further. I want them to make it last longer because when it goes further, I make more profits. When it lasts longer, I make more profits. And that's what I'm looking for. I'm looking for the bigger time frame, the smaller trend within the larger trend. That's what I'm looking for. The smaller trend within the larger trend. Because that's where the opportunity lies, is going with the trend. Going counter trend is scary, okay? Because you don't know when they're going to reverse or where they're going to find support. Unless you're intimately, involved with that security or that ETF and you trade it all the time. All right, but it's very hard to tell if you just walk onto the scene and you're into Apple and you haven't traded Apple before. Okay, it's difficult to tell what its behavior is normally. Okay, for me, I understand the behavior of the SPY very well because it's pretty much all I trade. Between that and QQQ are probably the only 2 indexes I trade, and I trade both of those mainly for the liquidity. So let me go back through and let's look at VWAP. You can see where VWAP jumps. See how VWAP jumps with the candle right here. See this? Here's a candle here. Now notice there's a gap in price. Price jumps up there. Well, you can see the VWAP jumps up with it. Okay, so that would not be a moving average. That's price starting out new at the new price way up here instead of down here. See how it's pointed down, then it abruptly goes to the upside. Now, remember I was telling you earlier about price action, not price action, but the average is not exact, and I'll kind of prove it to you right now. This is a 10-minute chart. So if we take the third candle, okay, and we put the crosshairs on it, up here you're going to see a data box. All right, and in that data box, it's going to tell us where VWAP is. All right, it's going to give us a number. So I'm going to put the crosshairs on the third candle because that would be the 9:50 to 10 o'clock candle. Okay, that's the 9:50. Now it says right there, VWAP average. Okay, I guess at the close supposedly is 685.99. Okay, I'm just going to go to the next one just to see what that says. And now the next one says the VWAP moving average is, you can see it, it's the same color as the VWAP line. It says it's 685.92. Okay, so again, we're working on the 10-minute candle, all right? And we're working on the 10 o'clock candle. Okay, so now I'm going to flip, all right, to a 30-minute candle. Okay, let's see what that looks like. So 30 minutes. The market opens at 9:30. All right, and it first candle would take us right up till 10 o'clock. So put my crosshair on the first 30-minute candle, and lo and behold, VWAP is the same number, 685.99. Okay. Oh, but wait. How about the 2-minute candle? Okay. Let's take the 2-minute candle at 10 o'clock. Okay. And you're going to see that VWAP is probably going to be a different number. All right. So we're going to go, here's the 2-minute candle. This would be, put the crosshairs up here. Okay. So that's right there. That's our 10-minute candle. Notice VWAP is different now on the 2-minute chart. Again, because they're taking the average of the last price of that candle. All right, so look at it. It's 686.17. Okay, on that. Is that right? Yeah, Let me just move this around just a little bit to make sure I got one right. Yeah, 686.17. Well, I think I was back here. Okay. Let's try it one more time. Okay, so here is 10 o'clock, 686.04. See, about 5-cent difference. So it's not exactly the same. That's my 10 o'clock candle. I'll go to the 10-minute chart. Okay. 10-minute chart. Okay. Third candle. 685.99. Remember that? Okay, so it's different. All right, so I like a 10-minute trend. I like a 10-minute downtrend under VWAP where price and the trend are peeling away from VWAP. That's where my opportunity is. Okay, here's another trend. Okay, this was on a Friday. This is an uptrend ripping up and away from VWAP. Notice the right angle. Okay, price gaps up. Okay, the VWAP starts out brand new, so it has to catch up to it. So it winds up jumping up to here. All right, so in the morning time, I sometimes can't trade the regular VWAP unless I put the pre-market on there. Otherwise, I'm going to get a jump in price, and I won't have that trend that has broken clearly away from VWAP, all right, early in the morning. Okay, I need to see that break away from VWAP. Because if it's still attached, there's a possibility all it's going to do is chomp around. All right, I want to see separation of the trend and VWAP. All right, now if I don't have the pre-market on, this will rip up and follow VWAP. So oftentimes I will either put the pre-market on, or I have another trick in which I take the anchored VWAP and place it here, and you notice, see how the anchored VWAP does not jump up there with the price? So here's the VWAP line, and instead it doesn't jump all the way up here, it stays constant right through there. That's my trick, is I use the anchored VWAP on the beginning of the previous day, so I can weed out that jump. And now I've got an uptrend that has clearly broken away from VWAP, but it's a different VWAP. It's the anchored VWAP. And if you understand the dynamics of VWAP, you would recognize that that's normal for VWAP to chase price down early in the morning. So it becomes, if you don't have the pre-market on, it becomes kind of useless because of the way that it jumps and starts price right there at the first candle, and you don't get the opportunity that lies in the beginning of the day. See, in the beginning of the day, you get a lot of volume that comes in at the beginning of the day and at the end of the day. Well, if you're looking for opportunity where the trend is separating itself from VWAP, all right, and VWAP doesn't perform in the same manner because now it starts out new and it just jumps to wherever price is, you're not going to get the separation needed for you to visualize the trade that you wanted. So for that reason, I put the pre-market on so I can eliminate the price action, and it can clearly show me prices moving away from VWAP, or I use the anchored VWAP. That's another one that shows me that price is also clearly moving away from VWAP, and that gives me an edge in the morning. So I don't trade without it, okay? I like to take my trends that are trading with VWAP. I like a downtrend when VWAP is sinking lower, okay? I like an uptrend when VWAP is rising higher, okay? When VWAP sits in the middle and price chomps around over, under, that's consolidation. Okay? Stay clear of consolidation. Actually, if it's a bull flag, what I do is I trade the bottom of the flag to the top of the flag. That's what I do. Okay? I mean, you can treat it however you want, but I trade from the bottom of the flag up to the top of the flag whenever I get that consolidation where price is chomping around like that. Okay, so that's VWAP. That's something that I don't trade without every day. Here's another beautiful 10-minute uptrend. Let me see if I can zoom into that for you. I'm going to move things around. Okay, you can see the candlesticks are up on top of the 3. All right, you can see the 3 and the candlesticks are up on top of the 8. Okay, you can see the mouth of the 8 EMA, which is the white line, and the VWAP line. See how the distance gets wider and wider and wider and wider and wider. Now, there'll be times when price will pull back to VWAP and oftentimes bounce off of it. And then there'll be other times where price will, early in the morning, it will fall down to where VWAP left off the previous day. All right, it'll go straight to where VWAP left off the previous day and then turn around and reverse. All right, so that's another popular move where price goes right to where VWAP left off the previous day and then just jerks, does a 180, starts going back up again. Okay, so I'd say is there any questions, but this is a learning tool for you to learn. Again, here's the trend. Here's the VWAP. Uptrend, okay, 10-minute chart. Uptrend over VWAP, okay? See this? This is back and forth. This will tear up your account right here because you'll be chasing the breakout and you can see what happens. It reverses on you. And then you'll be chasing the breakdown and then what happens? It reverses on you. Okay, so when you see this, go like this 2 or 3 times before noon, over, under, over, under, over, under. You're not getting that clear breakaway. Okay, best bet is to stand down, not trade. Sit on your hands. Park the cash in the account, and it's okay if it stays there. Okay? Really, it's not worth putting it at risk unless you're used to trading this and you know how you want to trade it. Okay? Me, it's a bull flag. All right? It's a bull flag because price moved up and it's moving over to the right. So I like to trade it from the bottom to the top, bottom to the top, bottom to the top, bottom to the top. As you can see, this worked out nice for a 10-minute uptrend. But look, remember I was telling you earlier, see how the daylight that should be between the 3 and the 8 is eclipsed by the candle bodies and the candle tails. And there's very little daylight in there. And what happened? The bears took over. That was downward pressure, and they pushed price down, back down to VWAP. And here we got price moving up and over it, down and under it, over it, under it, over it, okay? You get the message? Okay, so that's not good. If you're going to trade the breakout, look how long the trend lasts. The trends don't last very long at all. This one lasted for 1, 2, maybe one candle over VWAP, over the spike candle, and then that's it. It stops. So when you see this go over and under like this multiple times before noon, it's probably best just to sit on your hands, and this lets you know that you want price to break out of the range. And you can see the range. All you got to do is see the price candles. They're moving, they're stacked up like soldiers right across the top of this ridge right here. You can put a line across their hats just like that. All right, and you can put a line right where their boots are right there. So for me, when I see this, I just want to trade from the bottom to the top. Let me see if I got my drawing tools up there. Okay, from the bottom to the top, from the bottom to the top, the bottom to the top, the bottom to the top, the bottom to the top. Okay, now the first time I go from bottom to top, right here, I exit 90% of my position. I'm keeping 10 just in case price wants to rally. Okay, second time, I'm exiting only 80%. I'm keeping 20 in case price wants to rally. And the third time, I'm keeping 70. I'm keeping 30%. Okay, I'm exiting 70. And the reason, in case price wants to break out. And look at this one right here. Price rallies up and breaks out. See the top of the hats? And climbs on top there. And then from there, it rips up higher. Okay, so there's price action ripping up higher. So that's, for me, that's the whole reason I keep a little bit more each time. Eventually, they keep pounding away at the brick wall overhead. All right, and eventually they're going to get through. All right, and you want them to have, you want some contracts, all right, for when price does break out or break through. We don't know how high it's going to go. It might go clear up to 697. It might just go up to 684, a dollar over where it was trading, and just hang out there. Okay, but you don't know. But that's the whole reason for hanging on to a percentage of your position for the breakout. The first time, it usually gets stuffed. All right, second time, rejected. Third time, you're probably going to break through. The third, fourth, or fifth time, as price gets up there, you want to make sure you got something for when price breaks out up top there. And you don't have to. I mean, you could very well exit 100% of your position, wait for price to break out, test it, and then get back in up there. That's another method of trading the channel or the bull flag. All right, traders, that's it. If you're watching this, you're probably thinking about being a new member, or you are a new member, and I just want to say I appreciate your patronage to the BYOB service. My name is John Carignan. Feel free to reach out to me. I'd be glad to help each and every one of you. Appreciate that. Thank you so much.